Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, January 11th, CPI data. Oh boy, today we got a little bit of a reality check in terms of inflation because we all knew that on December, inflation was going to tick up, and certainly it did. Year over year, the core inflation rate ticked higher, 3.9, a little bit lower than the previous one, but expectations went 3.8. And I always say the same, expectations lead the market. And right now, expectations are really high on the market. Market wants the inflation to really go down, the economy to really cool down, and the Fed to aggressively cut rates. And I think that's too much. Month over month, 0.3, flat as the previous one and meeting the expectations. But the thing is that inflation rate, the general one, is what everyone is watching. The infamous 2% and 3.4% year over year, way higher than the previous one. And market, even though was expecting 3.2, a slight higher, again 0.2% higher than the consensus and 0.3% higher than the previous one. Month over month, 0.3. So that's a miss in every single bit of data today. Initial jobless claims came way lower than expected, and continued jobless claims came way lower than expected. So two more misses. So today it's everything, it's bad news. If we check the report on the CPI numbers from the BLS, we can certainly see the outlier. The index for shelter continued to rise in December, contributing over 0.5% of all the monthly items increase. So certainly, if we see the table, we can see that shelter increased 0.5% and medical services 0.7%. The only thing that's good news is obviously fuel, gasoline, energy overall. It's minus 0.1 on commodities, but still look at the amount of numbers close to zero, but still positive. And again, shelter, services, way higher than expected. So if we go to the charts and start seeing the price action, we can certainly see that today it's a reality check. In terms of technical analysis, not fundamental, technical analysis, market always do the same. They will push to critical levels waiting for key data. And if that key data comes as expected, we break out. If not, we just pull back or break down support. So right now, after the pullback from 17,165, we were at this daily fair value gap. We tried to push higher and we rejected. So that's actually the key to understand today. We tried to go higher. This is the 15-minute chart. We took liquidity up here. That's the trade that I took today. And then I was waiting for the number and the number disappointed me. So that's why I didn't trade since the open. And as you can see, the pattern is really low. You can try to catch a knife. You can try to pick a bottom, but I think today is a day to really wait for market to stabilize and see and react to the close and the amount of price action and technical data that we get. My trade, as I was saying, my trade was in this push into London. So we started, I was looking pretty close to these relative equal highs and this inverted fair value gap. And at the open of London Open here, we were just consolidating. And after this breakout, I took the first pullback, this order block, up here, and my target was the buy side liquidity. So basically, I think my entry was 21 something. So 21. I think obviously was this fair value gap in here where I was trading. So the stop would be I don't remember, but it should be around here. And the target was up here at 36s or even 38s. I think I took 36s. So 3.71 risk reward ratio and a nice push into this consolidation higher, marking the pre-market highs. And actually, that was my trade. That was $15,300. I don't need more, at least in pre-market. I was waiting to see the numbers, but as you can see, we saw the numbers. We swiped the liquidity higher, the pre-market high here. We swiped lower what? The pre-market and relative equal lows, and also the pre-market lows. Watch also this liquidity down here that also got swiped. And then we started pushing higher. Everyone, I think, on the media and social media were, okay, we're bouncing. This is not bad at all. It's enough for the Fed to... No. You really have to wait for volume to come in and to see, no, this is not okay. We don't like these numbers. And even though we might see some pushes, this is the first fair value gap that I would be watching if I will continue trading. This is the other one, and then there's another one here. So a lot of inefficiencies in these ranges, but at some point we are going to push this. Obviously, the EMA is acting as resistance, so we might need to wait a little bit. Don't be early. There's certainly opportunity to really trade these inefficiencies, but today is inflation day. CPI day equals anything can happen. We might continue selling off. So be careful. Be careful. Manage your risk at the extreme. Dollar is pretty strong. Treasuries are in the red. Small caps are deep in the red. Not a single one. Big tech stocks are in the green. So everything is against you. Are you willing to take the risk? You can certainly do it, but please be patient, be disciplined, and don't ruin the week just for one day. My recommendation, as always, is if you didn't trade this short, if you didn't trade pre-market, a little bit push like me, just don't take any trades. Wait for tomorrow for better opportunities. Market is not supposed to be traded like this against it. Don't put a lot of weight into your decisions. Be smart and trade the best setups. And right now, I don't see anything. Let me just check what we did. We swiped this low, perhaps. Let me just see if we swipe this and how we reacted to that. Okay, so maybe we can have a trade up here. But if you didn't watch this, I mean, it's certainly the first time that we are touching the EMA. There will be plenty of shorts. The first sign of strength would be to break this bearish fair value gap into perhaps this liquidity up here. So real quick, if you took this trade, the first candle to break that, stop there, taking the liquidity here. This is a nice trade, 2.86, 120 points. Are you going to hold against the market today for 100 plus points? Be smart. Be smart. I think it's better to wait for tomorrow, even though it's Friday, or perhaps next week. Wait for the best setups. Those that are so easily just in the green like that. Don't go against the market unless you are giving a shot short. If you're looking for longs, wait for better opportunities. Where? Let's see how we end up today. There's a fair value gap in here that we just touched, but there's also liquidity down here. So be careful. It's potential to both ways. Be smart and be disciplined. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecast, market updates, and market recaps from fundamental analysis to technical analysis on different markets. So thank you all for the support. Remember that discipline and risk management is key for your success. Stay safe, everyone, and see you tomorrow.